because I would have forgotten all about that. Hola. Hey, Val. The read I add, thank
Whoa,
you here to remind me.
I love your shirt, Val.
Oh, thanks.
She looks so studious today. I know somebody told me one time I looked studious, and this was before I knew what that word was, and I thought they were calling me stupid because I didn't
Oh
know.
my
Because I just
gosh.
thought, and I didn't say anything to him at the time, but that's what that was like the first thing. Studious, stupid. That was what I
Yeah.
used to.
Oh, that's funny.
Sad. Says Allie is waiting in the someone is waiting in the lobby for a team member progress. Oh, crap. I think I had a meeting scheduled with Allie, and at this time, can someone message Allie and let her know that we have our coffee chat right now, and I'll have to get back with her on
Yeah.
meeting with her?
Yeah.
Oh my gosh.
You got that, Val?
hmm
Okay. I just didn't want to like bombard her. Double
Yes,
messaging.
good call. I'm gonna wait a few minutes, see if we can get anybody else on here. And this was the reason that I wanted to be able to bounce it around, because like some people aren't gonna have consistent schedules. I know that program that I just got into, like they do the same thing, which is nice because they had a call right. It's so funny. So you all may not know, but we have a client, Tyler Dorsey, that has Focus Forward, and
Oh
she's in
yeah.
that program. And so
Oh,
in
she
that program,
is.
yeah. So she's going
Oh,
to be at the event in September. So I'll get to see her down there. And which she lives 30 minutes from me. So it's not like I can't see her if I wanted to.
yeah.
But she's in there. So it'll be fun to see like how she progresses and grows as a result of that. And so that'll be really fun. And the really cool thing about that I love in there is that this is going to be so nerve wracking for me, but they make you like rehearse. I guess there's like 6 or 7 different calls, and there's a theme for each, and they just rotate this cycle. I think it's like 6 phases or something, of 6 parts of phase one, and you have to go through and do your rehearsal for like the sales call, like if you were selling to somebody. And so I think that this week's was on like reasons people should work with you or should like take up on your offer or whatever, and then like closing that offer. And so I got to hear a piece of hers and some other people's on there while I was driving before I got off and came into this coffee shop. So that'll be a good lesson when I get to the opportunity to do that.
Yeah. Oh.
I think that they are on phase like part 6 or something
hmm
of it. I'm not real sure, but and I was talking to Courtney about this earlier, and I think that it's always going to be so important. It's just really like beliefs they affect so much about people's commitment and how you show up. And I think so many and I'm so glad that they address this, and I wish more people would address this, like when you get into something and understanding that it's not going to be the magic pill. Just because you swiped your credit card doesn't mean that it's going to fix the problem that you paid them to solve for you. And just being aware of that, like when you invest in somebody for yourself, like you're helping to close that gap for yourself between where you are and where you want to be, and to have the clarity to be able to get to where you want to go. But like there's never going to be anything that does the work for you that you got to do for yourself. And I just think about like, where do people's beliefs lie when it comes to making investments in themselves? And I think that's just something for all of us to always be aware of when it's coming to that. Because I think so many times, like I don't want to ever invest in anything where I didn't take full advantage of it because I didn't believe in myself, and so I assumed that somebody else was going to do the work. So yeah, there's my belief thought for the morning. And I just see where that emanates so many things, like the conversations people have, how they design their businesses, like how intimate they get to be with their numbers. Like the thing
Mhm.
is that if you don't believe that your business is going to be successful, or if you don't believe that you're going to be successful, you're not going to do the little things that build a successful, like a successful person does. So you're not going to be looking at certain numbers every day, every week, every month, every quarter and year. You're not going to go through and do business planning every quarter and sit down and do this stuff. Like if you don't believe in yourself, because if you don't believe in yourself, why would you commit to doing that? If you didn't believe it was going to happen for you, then why would you do that stuff in the first place? And
Mhm.
so I think that that's just something I really want people to understand. And I think that just to kind of something to sit with is where, like in business, in life, like where are our actions telling us that we don't believe in ourselves when we know that we want to do better, but our actions are not like believing that, are not backing up. So they're reinforcing like a negative belief about the future that we want. So that's just something that I've been thinking about for myself. And like I just always come back to, if you're not getting the results you want in anything, like I think about physical health and how for so long, like I remember the beginning of this year, and I felt like I traveled a lot the first couple of months of this year. And I made that as an excuse as to why I wasn't like in the gym and I wasn't working out. But the thing is that it wasn't anything to do with that at all, because I'm working out twice a day now. And it's not like I have any more time than I did back then. I was just making excuses. But I didn't have one of the things I can see about myself now versus then is like I didn't have the belief in myself then like I do now. And so like just going back through that exercise of like visualizing like what does physical health look like for me? What do I want myself to look like? Like what do I want myself to be? Like how do I want to be on a daily basis? And and it's like I know I can do those things because I've done it before, but it's like, okay, it's a belief problem. Like I don't before it's like I can't attain that. So I wouldn't work toward it because it's like, why would you? So does anybody have any thoughts on that?
I mean, I definitely, you see a lot of people who don't believe in themselves, and it's hard because when you see the people, you see the potential and you believe in them. So to see them not take action on things that they want to do, just
That
because
is
they
so
don't
hard.
believe in
Yeah.
themselves, that's
Yeah.
hard.
Mhm.
Yeah. Yeah, it is.
I love Macy she talked about this in the challenge, and um she talked about it in a podcast episode that I just listened to as well. But if you remember, she talks about she relates it to Beyonce and how she has this alter ego that Beyonce calls Sasha Fierce, right? And how for ourselves sometimes we kind of need to have, okay, what is this alter ego? But putting it in the mindset, we could, this alter ego is what is the 10x version of ourself, or what is, $1 billion Brittany or $20 million Courtney, right? Like, and using that as like, okay, this is my alter ego, and how does this person respond to those things? And kind of like going into the you fake it till you make it, right? So, okay, I'm gonna be my alter ego of $20 million Courtney. How does she think, act? What does she do and say? And even though I don't quite believe that yet, I'm gonna pretend that I am this person to start reaffirming to myself that this is who I'm gonna be, you know?
Yeah,
I
I like the
just
alter ego idea.
yeah. Mm-hmm.
Because then
Yeah,
I feel like it almost makes it more permissible to like go after whatever you want. Because you're like, well, it's not really me. It's like my ego that's doing it.
yeah, and it can go. So, like, for me right now, I'm so in this, like, okay, I am trying to figure out how I want to dress and taking care of my skin and different things to just kind of snowball, my confidence and everything. And so it's like, okay, $20 million Courtney, how does she dress, or what is her skincare routine, and that's not me, Courtney, but that's what $20 million Courtney does. And so I'm trying to start doing those things to slowly become that person.
I think, and it makes me think like, at the end of the day, because our flagship program is Clarity to Cash Flow. And to me, it's you know, we work with businesses only, but it's like clarity over your vision and what you want and your beliefs. And it's like, how does that come back to your cash flow at the end of every day? Because it does, like how you eat affects your cash flow. Like how you treat your kids and raise them affects your cash flow. Like, and so I think about when it comes to taxes, like how does your belief about what level of wealth that you can build, like how does that come back to impact your taxes? Well, the thing is that if you don't think that you're the type of person that has anything meaningful for which to ask these questions and like plan ahead and be proactive for, then you're just not going to do it. And then we have, you know, then you'll have the set of people that are like always a year behind when they're waiting until the beginning of the year, when they're waiting to like the start of the tax season to get all of their financials cleaned up, then to start asking questions about how their business did and about what they should do to save on taxes. Like, bro or sis, like you're already too late. But, and it's like, okay, but why did you wait that long? And some people, there's like a thing where it's like, what level of ownership is a person taking over their situation? Because if you're not taking ownership over your situation, like it's hard to help those people regardless. But if it's like, okay, I'm going to learn how to take ownership over this, and it's like, I need to learn what questions to ask and what do I need to be aware of like throughout the year, then you'll understand the value of like planning ahead. Because while there are a few, like a handful of things that you can do when it comes to taxes to save on them, it's such short-term thinking to wait until tax season. And the thing is that planning to build your business to be extremely profitable, planning to minimize taxes as much as legally possible, like that is a long game. You have to be committed to doing that. And so it's like, what kind of, if I was the person that I believe that I could be, and that I want to be, and if I know I'm going to get there, it's just a matter of like putting in the work. What kind of questions would I be asking about taxes and about my business? And so when it comes back to that, just understanding like what kind of person asks what kind of questions. And so it just made me think about like at the end of the day, like your belief just impacts everything. It's going to impact what you put in your face and how you use your money and all that stuff. And if we have somebody hop on here, I think I should be able to see it. Yeah, I should be able to see them if somebody hops on here. But I wanted to talk on here real quick. And for anybody that watches this recording, I want to make sure that they understand like what is our mindset for building profitable businesses. And one of the things that I'm not going to elaborate on this today, but something that is important, I think, to understand is the difference between building a business, growing a business, and scaling a business. They each have different meanings, they have different mindsets, and they have different focuses. And it's not something that you do once and then you get to the next level. It's a cycle. Because the thing about building businesses is that you don't get to a point where you don't need to build anymore. You're going to get to a point where you built out this 3-bedroom, 2-bath home and it was great for where you are, but then your family starts expanding and your kids have kids and you're having family reunions at your house, and now there's not enough room for you to be able to host a family dinner, so you need to rebuild or you're going to have to add on, and there's going to be steps to that. And so you got to think about that in terms of your business. And you know, every business is different as to like when is that step going to be. But when I think about steps, I think like, okay, you built it and you grew your business and it was really profitable and you might have scaled it to a certain point, but now you're going to have to be able to sacrifice some profitability to reinvest into your business to be able to go back through that phase again. And you want to be able to do it profitably. And I think that's one of the things where like understanding that distinction is very important. And that's where that vision always comes back into play. Because if you don't have that clarity, that like sometimes it's going to feel painful because your bottom line's not going to look the same as it did this time a year ago. But you got to be aware of like, what are you building now, or are you scaling, or are you growing? Like if you think that you're in scaling mode and you're really unprofitable, it's like, okay, we really got to dig into this. Like processes are breaking, or people are breaking, or something is breaking down somewhere. But if you know that you're building your business, you're investing more in the infrastructure of your business, right? You're probably paying a lot more for training. You're bringing on team members. You might be investing in programs, coaching, training. And, you know, if you have a business like a med spa that uses equipment to provide treatments and results for clients, then you're going to be investing in equipment that's going to, if you don't finance that, you're going to be using a lot of cash for that. And so, just understanding what phase people are at in their business is so important. And so we will touch on that. That'll probably be a topic that we start touching on next month. And I do plan on having a podcast. I've started to articulate my thoughts around that, and I'll end up having a podcast that kind of goes through that as well. And it's going to be like a multi-part thing, because I want to like talk about high level, and then I want to break down like how do you know where you are, and then profitably going through each of those spaces. Because the thing is that if people are not um, if people are not prepared financially for what it really takes, and mentally for what it really takes to be able to grow and scale, then it can cost you a lot of money really fast. And I think that so many people are so anxious to chase that top line and to chase revenues, and they sacrifice their profitability for the sake of that. And that's not what you want to do. Like, you want both. And I don't think that there's some people that it's like they hate on revenues and they love on profits, and vice versa. But there's a balance to both. There's like a time when both of them are great, and there's a time when it can be to your detriment if you're not paying attention to each of those things. So we'll talk about that. But before I get into, there's a few things that have come up about taxes a lot here lately that I want to make sure I cover. This is going to be relevant for anybody, especially if they're building families. There's going to be some important stuff in here for people. But before we dive into that, Courtney or Val, did y'all have any comments on anything I was just going over? Or is there anything in particular to taxes specifically you want to make sure that I bring up if it's relevant to what I have on here already? Okay.
No, I think the list that you had was good.
Okay, cool. So and I think I may have mentioned this, but what is the phase that, like, when do you need to start planning and being very intentional about taxes? Well, that's like always. When you start a business, you need to be aware of what you're doing. And so there's 3 phases that when we're looking at like money strategy and financial strategy for your business and for taxes, there's 3 core areas to look at. First, it's the compliance, because the thing is, if you don't have your compliance, if you don't have taxes set up properly, if you don't have the right account set up, if they're not being filed timely, like, it's not going to matter if you have a really phenomenal business. The government will shut you down if you don't have your stuff taken care of. I have seen people get shut down for not paying their sales tax, and then you can't sell anything, and you have no business if you're not permitted to do that. And people will, that some people get up in arms about all these fees they got to pay, and I get it. And one of the things I think is that we're not going to get out of paying license fees to be able to be in business. You're not going to avoid paying taxes whatsoever. You're not, sales taxes is, a really common one. Like, you're not going to get out of paying that stuff. So just being grateful for the fact that we have these systems in place, and the government that does put some of these systems in place, and the benefits that it does provide to some extent, and regulating that to an extent where it prevents like really shady stuff from happening. Now, we could go down that wormhole. There's still a lot of shady stuff that happens in our government. We all know that. However, it could be worse. So I'm just going to put it out there that way. And because that's the thing is, like, okay, I'm not going to pay less in taxes. I'm not going to grow my business by focusing on the things that I don't like. Okay. So, compliance has to be the first thing, making sure that you got, like, somebody's helping you take care of taxes when they're due, setting up the right taxing structure, making sure that, because the thing is that when you have a business, your tax situation, your compliance structure is like 10x overnight. You have so many more licenses, and not even just taxes, but like with the Secretary of State, with every state, you're going to have a Secretary of State renewal. Some states is every year, some states are every other year. So one of the things that we have started to do in our tax planning program is that we have a compliance tracker, and we're going to set that up for all of our clients that are in that tax planning package. And one, obviously, that's to help us to make sure that we keep your stuff on track. But the other part of that is to bring clarity for you. Like, hey, this is everything that as you scale your business, there's stuff that's going to be added to this list. And so just to have clarity over that. And the thing is that clarity brings you peace of mind. It doesn't matter if it's something you don't want to see or it's things that you do want. Like, just having that peace of mind over, like, okay, this is all of it right here. I don't need to worry about anything else, because, like, at least if I need to reference something, it's on this list. So we're going to be keeping track of that. The second phase of financial strategy is effectively managing your money, because, and why this is I would say that why this is second and not strategy is because everybody wants strategy and they want to amplify their money and they want all this interest income and they want cash flow and they obviously want profitability. And I'm like, yes, please want that. However, if you are not effectively managing what you have, you do not want to multiply what is mismanaged. And so we want to have like systems in place around your business finances. And while we're not going to be looking at your personal finances and your personal bank accounts and all of the other stuff that you've got going on, there will be times where we will bring awareness to those things and assets that you have personally and maybe debt that you have personally in addition to your business finances. Because the thing is that you got to remember, how you do one thing is how you do everything. And so you want to make sure that that's what we're here for, is to ask us questions like, how should I set this up? Or what do I do with this? And one of my favorite things is that we have implemented just really what I think are really simple cash flow management systems with many of our clients. And it literally makes stacking cash so simple and mindless in their business. And then as you stack cash and opportunities come up where you can invest in something else or expand your business or distribute it for your own use, if you're able to do that, then we can start diving into strategy. But if you don't have anything to use in the first place because you haven't managed it well, there is no strategy to be taken advantage of. So you always have to start with like effectively managing yourself, and believing that I am a good steward of money. I am somebody that knows what I'm doing. I am somebody that goes out and takes what I've been given and multiplies it because of the way that I oversee it. And then you can get into the strategy side of it. And then that's the last piece of it, is how do I multiply this money? And this is where the profitability of your business really starts to get much more honed in on. And then when it comes to when I think about businesses, I want them to be a wealth building tool. Obviously, I want them to have huge impact, but they're also like, why do most people start businesses? Because they want financial freedom. And we want people to be able to have that, but you're not going to have that if you don't have a really profitable business in the first place. Like you're just going to have another problem otherwise. And so this is why it's really important. I think at the end of the day, always coming back to having clarity, like, what am I working to create? Who do I want to be? What is it that I want? What do I want to build? And not making that a one-time exercise, but making it something that you come back to. I do it on a daily basis. Every day I'm visualizing, like, what are we building here? Like, how do we help people? What does that look like? Like, how can we do that better? How can we simplify it? What does this look like when it's 10 times bigger than it is now? Like, I'm constantly going through that. And I mean, Courtney and Val know, like, we're always working on progress and refining things and simplifying things. And it's because we're always going back to and reiterating, like, what is that vision of how we help people? Like, what are we doing here? And so we're building that profitable business, and we're focused on using that as a wealth building tool where you're going to, as long as you effectively manage your financial resources that are a result of the results that you get other people, then you're going to start stacking up cash. You're going to start stacking up wealth inside of your business. And so what we want to be able to do with that is we want to be able to show you that your business is profitable from a tax perspective. And why this is important is that at some point you're going to have a lot of cash in there that you may not want to use in your business. You want to use maybe to purchase some real estate that's going to cash flow you so that you don't have to work for the rest of your life. And so if you want to be able to take that money out of your business, so many people shoot themselves in the foot right here. So many people will want to make their business look as marginally profitable, if not always at a loss, on their taxes. And the problem that you get into with that is that you're going to have to use those taxes at some point to be able to get some asset that you're going to want. If you are actually invested in growing your wealth and not having to work the rest of your life away on things that you are not passionate about. Like, one of the things I will say is that we don't believe in retirement here. That may be a word, but that is not like something in our vocabulary. It is not a concept. Now, we can use retirement assets like IRAs and things like that for tax advantage and for long-term cash flow planning, but retirement itself is not a concept that we necessarily believe in here. And so, but you're still going to want to be able to, like, as you get older, you really want to get in alignment with like the one thing that I really want to do. And I can pretty confidently say for any business owner that has been in business for 1 to 5 years, like, you're not in that vein of alignment of 100% yet. And so you want to be able to invest in assets that are going to cash flow you and help you to not have to take the stress off of having to work for money all the time. And so you're going to want to be able to distribute money for your business. The problem with being able to do that is that if you have always shown a loss on your taxes or you've barely made any profit, if you have a partnership or an S corporation, which most people in here do, or if they don't yet, they will, because that's kind of another sign. Like, if your business is not profitable and you're still taxed as a single member LLC, like, you don't want to stay there. So we got to do something with that. But if you have a partnership or an S corporation, C corporations are a different beast. And so I'm not going to talk about those today. But if you have an S corp or a partnership, if you distribute money or assets out of that business, this is why tax planning is so important, and you don't have enough tax basis there to cover that distribution, you can trigger taxable gains for yourself. So for instance, like, if your business, your basis in your S corporation, as the partner of that company is $50,000 and you want to distribute $150,000, then you're gonna, in most cases, you're going to trigger some kind of taxable gain scenario that you're not aware of. So you got to understand, like, just because you're taxed as an S corporation now, or just because you have a partnership, like, that is never allowable as a slush fund. However, there are ways to be able to do that, to take money and assets out of your business to be able to invest in your wealth. But this is why tax planning is really important, because if you don't realize that your basis is not where it should be to be able to take out what you want, you're going to shoot yourself in the foot. Now, if we catch it early enough and you've already done it, if we catch it before the end of the year, then we may be able to fix it. Just put that money back in there or something. But this is where I know earlier this week we had a brief conversation with somebody that had a lot of cash they want to put into a savings account. I would recommend just keeping that in your business savings account until you know what you're going to use that for, and just going back to being intentional about that so that you don't start running into tax issues. But the thing is that if you have a business and you want to take, whether you have purchased land or a building or a piece of equipment, because it's not always just cash. If you want to take that stuff out of your business, that's a conversation you want to have with your tax advisor before you make those decisions. And so I think a lot of people do things in their business and they don't realize, like, how one thing affects so many other things when it comes to distributing money out of your business. So really important. And that's why we're here. Like, we have these coffee chats. You all have access to our chat, our text message, our phone number. I could not think about it. You all have access to our phone number where you can ask questions on there. Tax Dome is a resource for you all.
Telegram too.
Yeah, Telegram in there. And the reason we have those separated, like, Telegram is more open-ended, but the thing is like, if you're not giving out specific information, ask those questions in Telegram, because somebody else is going to need that help. Like, this is a community. We're here to help each other grow. And the thing is that we want to do that together, because people that grow together grow faster and better. And we want to educate one another. There's no competition here. But I mean, if it's specific, obviously don't drop that in Telegram. Or if there's, like, proprietary information or private or whatever. But yeah, just asking those questions before you choose to make that decision in the first place. So that's something just to think about. If you got when you start to effectively manage your financials in your business and you've done your business planning because you're a proactive, whoever you want to become, because you believe that's where you're going to get to, and you've planned out and you're like, okay, we've done financial forecasting based off of the goals that we have for our company, and we're not going to need all this cash that we're going to stack up in the next 12 months to 3 years. Like, we want to go buy some real estate, for instance. So being able to say, like, okay, what are the ramifications of taking $100,000 out of my business to be able to do that? And making sure that you're planning ahead and not shooting yourself in the foot. So the next piece with that is that, entrepreneurship, no 2 days are the same, and your money, as much as you want to have consistent systems in place for management, but it doesn't mean that your profitability, your revenues, like all that stuff may not always be the same day in and day out. In most cases, it's not. And especially if you're focused on growing your business, no 2 years are going to look the same. So when you get your taxes filed for 2023, for instance, you're going to get estimated tax vouchers with your tax return. And something important to be aware of, though, is that if you make a lot more money in the next year than what you did when you filed your last return, you're going to want to be aware of, like, how is that going to affect me for income tax purposes? Because you do not want to get to where you're filing taxes at the next year and you owe a big tax liability. And one, you don't want to have to pay interest and penalties on that. Now, I will say there's so many things I could dive into here, but usually it's not huge, but you will, like, if that gap is really big, then the IRS is going to assess interest and penalties on that. And the other thing is that if you did not plan ahead and you weren't thinking about this and you weren't letting us forecast for you because you're not, actively doing tax planning, then what's going to happen is that you may be able to foot this tax bill that you have, but it's because you didn't plan accordingly. You have this big outlay of cash in the first quarter of 2025 that you didn't plan on, and it stifles your ability to do the thing that you really wanted to do, maybe. And I see this with people all the time, like they can't do something in their business, or they can't buy something that they wanted personally because they have this tax bill because they didn't plan for it ahead of time. And so this is why, at a minimum, pay the amount that's on your taxes. And if you're like, I don't know where that is, or I don't know what a tax voucher is, like you should have access to your last tax return. And it depends on, it's something for everybody, but if you have a business, you should have gotten estimated tax vouchers that are for the next tax year, because the government wants their money. And so if you're not sure about those and we took care of taxes for you, then we should be able to find those. If for some reason your tax liability was low or something happened and it didn't generate those, because sometimes it does happen if you didn't have a lot of taxable income for the prior year, it won't even generate those if it doesn't think that if it doesn't know what your actual income is now. So it's important to at least pay the estimated taxes based on the vouchers you got. But I would go, and this is why we want to do tax planning and be able to forecast this for people, because maybe you had a really profitable year last year, but this year you're in that phase where you're taking a step up. And so you're investing a lot in your business right now, and you're going to have a lot of depreciable assets. And so for tax purposes, you're going to have less net income to be taxed on. Maybe you don't need to spend all that money on estimated taxes right now. You might get a refund, but you'll get a refund if you overpay in. But if you don't have to give out that money right now and you can keep it for liquidity and just to have that safety hedge in there, like that's why forecasting is also helpful. Like it just brings clarity and it brings peace of mind to that at the end of the day. And this is why it's so important to make sure that your financials for your business are kept up to date so that you're able to do this really rapidly. Because you got to pay estimated taxes every quarter. The next estimated tax payment is due June 15th. And you can also make those payments out of your bank account for your business. Now, it's not a deductible expense, but you can pay those out of your business. People do it all the time, and it's totally fine. You just don't want to pay for your mortgage out of your business and your groceries out of your business. Big no-no. Does anybody have any questions about any of that? I know that Courtney, like you all have a business, so you all are familiar with this. So if there's anything else to add that you think would be helpful, just in case.
Yeah, all that comes to mind right now is just, stressing the importance of delineating your personal expenses from your business expenses. Because I think also outside of, the potential to open up, audits and issues and things with that, you also are not allowing yourself to have the clarity that you can be getting for your business. If you have personal expenses on your P&L, or, things, if you're properly allocating them to like owner's draws and things, you're distorting your financials in a way that it's not going to give you the clarity that you need. So outside of, potential issues with the IRS, I mean, you're not going to get
Yeah,
that clarity
it
that's
makes
going to
it
help you make
hard
decisions.
to, like your personal expenses will not show up on your business profit and loss statement, but it does make it more challenging to get a good grip on like the cash flow of your business, which is at the
Yeah.
end of the day what we really want to get clarity on. Because your business can look very profitable, but at the end of the day, your cash flow is not always the same. And in a lot of cases, it's not, especially if you have debt, if you're taking distributions out of your company, your cash flow is not your profitability. So it's really
Mhm.
important that you're using your business as a business and distribute money that you use personally and plan for that stuff so that you can better assess the health of your business. And so it's
Mhm.
not even just about taxes, but yeah, that's a really good point.
I think part of where my mind was going to was thinking about making sure you're clear. I know for sometimes, especially around tax season, we get questions on, oh, well, I have a home office and I have this, and can this be a business expense or whatnot? And making sure that you're clear on those things before you start categorizing, especially, we have some clients that we help do taxes for, but they kind of manage their QuickBooks throughout the year. And if they are someone who is, checking up on it throughout the year, making sure they know ahead of time, okay, yeah, this is something that I can partially have as a business expense, so they have that clarity throughout the year, and understanding, oh no, wait, this is more personal and I need to leave that off,
Yeah.
Um,
Yeah, I mean, if you're going to take like a home office deduction, like say you are using your home as part of a business use, like we will take care of that on taxes, but you don't want to pay all of your electricity and your utilities and all this stuff out of your business
mhm.
for that. And you saying that makes me really want to hone in on like and emphasizing like if you could do anything for yourself, build your business like you're going to sell it. Like even if that is never any desire that you have, you are still going to financially gain so much from being that intentional about how you build your business and the processes that you put in place and how you use your business's bank accounts and not doing it that way. And it's going to be so good for you, for your peace of mind, for the clarity it's going to give you, for the ability to tax plan. Because let me tell you, the more complex you make your life, the more expensive it is. Like people that commingle their stuff like this, like I it drives me nuts for them because it costs you more for us to go in there and fix those mistakes when if you would have just done it properly from the get-go. Because the thing is like people that start businesses, they know, like that you should not be commingling expenses. Like nobody's got to tell you that. We live in the United States of America. I know it's really simple to start up a business, but you know not to commingle those things. It is going to cost you more to make that unnecessarily complex when we have to go in there and fix it because they are commingled. And so just don't. We
Hmm.
can't do anything about it.
Another, this could be a whole side tangent, so we don't have to go too in depth, but one thing that comes to mind is we talk a lot about, or we have clients in different ways, they are traveling for work, or they want to know how to make travel, a business expense. And so just the thought that comes to mind was just to make sure to point out that the key to making things, tying in, say, travel or other expenses, is making sure we have proper documentation and reasoning behind all those things, because there are ways to do it correctly to get things like that to become business deductions, but it needs to be done appropriately with documentation so that, if ever, an audit, for example, were to come down the pipeline for them, that, okay, this is why, this is how, and all of that. So just,
Yeah,
that could be a whole side
all
tangent.
tax minimization, all tax strategy comes back to documentation at the end of the day. Because the thing is like if you don't have it documented, you can't deduct it pretty much. And when it comes to, I'm glad you brought that up because like when it comes to business travel, for instance, you can say you go on a trip for a week and you want to make sure that you can write all of that trip off for business purposes. If the trip is for 50% or greater business purposes, you can write off like your flight to and from there or your mileage to and from there. Now, if you go on a family vacation and it's for you're only going, you're going to be going on a family vacation, maybe you're going to meet somebody for a business reason for dinner one night while you're there. Like, no, you're not going to be able to write off all of that travel. You can write off the dinner, but that's all you're going to get. But if you're going to go on a business trip and 3 out of the 5 days is business related purposes, like you're going to Disneyland and you're filming content the whole time while you're there, and you're all relating it back to how being at Disneyland is a great example of how to build a profitable business. Like I can write off that trip. I'm going to have a lot of fun while I'm doing it, but I can write it off because I'm going to have the media from it. I'll have the receipts from it. I can be able to document it, and you'll be able to see it on my Instagram where for months where I went to Disney World, and it's like, how am I tying this back to using this for content for my business? Whereas you can't just say, hey, I'm going to do this for business and then have no proof to back it up. Like you have to have proof. And it's really simple. And it's just going back to like, who is the person that you are? Is the person that you are like go through like I have fun and I make sure that I have documentation so I don't have to worry about anything at the end of the day, that I have peace of mind and I can go to sleep at night not worrying about if I'm going to get audited and this $10,000 that I just spent is not going to be allowed. And so I'm going to have all these taxes to pay back. It's like, what kind of person are you? So that's just one of the things I think of. But travel, it's just that's another one of those things. Like just ask questions if you're not sure. Like get the clarity, get the certainty around it, and then go on about your life. Like we make this way so easy for people. And then one of the things, and I'm gonna have a module in Progress University for this, and so I've got a couple of templates to go along with this. But a lot of people ask about putting their kids on payroll, and so when it comes to putting your kids on payroll, if they're under 18, excuse me, if your kids are under 18 and you have an S corporation, you don't want to put them on a W-2 because the thing is that you don't have to pay Social Security and Medicare on those kids if they're under 18. So don't put them on, it'll cost your business more than it needs to. What you want to do is you want to create a sole proprietorship, not an LLC. You don't need to have another tax return. You don't need to have another Secretary of State filing fee. You can create a sole proprietorship that is like your family management company or whatever you want to do. And there's so many implications to this. So this is just an example. I would not recommend people just to go out and do this without making sure, like, does this make sense for your circumstances? But in a lot of cases, like you want to go set up like a family management sole proprietorship, have your business, have a contract with the business and your kids. You still going back to documentation. You got to document like how many hours a week are they working and what are they doing for you, and have a contract, like make them sign off on a contract, get them used to what this is like. This is how it actually works, kiddos. And make sure you keep really clear documentation for that. Now you will have that contract between the sole proprietorship and the kid, and then the sole proprietorship will have a contract with your company, like your S corp. And so you'll pay that sole proprietorship, and then the sole proprietorship will pay the kid. You'll just pay the kid the same thing you paid the sole prop, so you don't recognize a profit over there, and you don't have to deal with income tax on a sole proprietorship, and it's just really clean at that point. And then what that does is that saves your company from having to pay the employer share payroll taxes, and you can still pay your kid and you get the tax deduction, and they don't get taxed on that income as long as you are under the standard deduction filing threshold for the federal government. Where a lot of people, this is talked about all the time on YouTube. I think something that I wish a lot more people would include is that you also need to be aware of what is the standard deduction filing threshold for the state that you live in, if the state you live in is subject to income tax. Because the thing is that if the standard deduction for I can't remember what it is for 2024, if it's 13,800, something like that, if you pay your child less than that, they don't have to file a tax return for the IRS. However, if you live in a state, maybe the standard deduction is 5,000 for somebody that is single, then and they got paid $7,000, they're going to have a tax return in that state. They may not have a federal tax return, but they'll have a state tax return. So it's important to be aware of that. Like, what are the implications of this overall? And whether you're going to help that kid pay for the tax or whatever the case may be, if it does trigger income tax for them, you still want to be aware of that. And so, just setting that up properly where you don't incur additional unnecessary fees for setting up an LLC, which starting in 2024, that's like another headache that we have to deal with now, because if you start up a new LLC in 2024 beyond, now you have the beneficial ownership interest report that you have to file every time you start a new LLC. And if you don't, there's really steep penalties and fines for not getting that filed. So just don't set up another LLC. You don't need it. But you can pay your kids. You just want to make sure, like, at the end of the day, documentation is the deduction. So making sure that you have that contract, that you set up the bank account the right way. You can get an EIN without having an LLC. I think a lot of people don't realize that. And get an EIN for that sole prop. And then, just like I said, keep it segregated. So if you pay your kid $1,000, you're going to transfer $1,000 from your business to the sole prop, and then you're going to take it from that sole prop to your kid for $1,000. There's no income at the entity level. It's your kids. And then this is where people will, I wouldn't let my kids keep all that. They got to invest it, but they got to save it. I would let them spend some of it, because the thing is, what's the point in making money if you can't enjoy it, right? Like that sounds absolutely horrible to me. But let them enjoy a little piece of it. They don't need that. They don't need as much as we need. And get them to used to that mindset now, and then invest the rest. And so a lot of people will have their kids put it into that Roth 401k or the Roth IRA, whatever it is. And they have that tax-free wealth to invest in there. It's like one of the easiest things to do. You just want to make sure you set it up right where you don't cost yourself unnecessarily to do this. So, and the thing is like, most tax strategies that will save people the most money over the long term, it is the simple stuff, just like in your business. Like, it is the simple stuff that people are overlooking, because there's no way it's that easy. Like, yes, it is that easy. You just gotta do it. That's the hard part, is doing, for a lot of people. But did you have something to add for that, Courtney? I have to say real quick, Val, your name says my name, so I was like, I don't understand why that is.
I think it's because I logged into your Zoom account to get the Zoom link.
Oh,
So
okay.
I signed into my Zoom account, but it's showing your name.
Oh, it's good. Just as long as people know, like, this is Val, I'm Brittany.
Yeah.
Go ahead, Courtney.
I was just gonna re-emphasize what you said earlier, because I feel like it's a great little tagline to just ingrain, but that documentation is the deduction. Documentation equals deduction. Like, if you want to take a deduction, you need the documentation. Got to have the DD.
Yes, gotta have the DD. I love that. Yeah, and I hadn't even thought about that until like we were just talking. But that's how it always comes. Is like when you're in the groove, that's when like the good stuff comes out.
Yeah. So I wrote it down. I was like, oh, that is so good.
Oh man, yeah, we'll have to put that in the chat today.
In our progress dictionary.
Yes, in our progress dictionary and synonyms, and we have so many of those things. Like, we have to get that going. But yeah, so is there, and I think that good, I mean, there's like a lot of info there for somebody to cover, and so many questions I feel like will be generated out of this for people that listen to it, and come back and want us to help them with anything. But for people that are, again, for people that are in our tax planning, we'll be helping them with this in a very personalized way. But for anybody else that's in Progress University, like, if you have questions, part of your access to the Progress fam is that you can ask us questions. And as long as we don't have to go down a wormhole and do 3 hours worth of research, like we will answer your questions. So that's what we're here for.
Yeah. Oh, good stuff. I know, I'm just thinking about how many people have recently talked about like kids on payroll specifically. So it's going to give them just a little taste and probably make them think of other questions. So please ask those
Yep, that's
additional
one of my
questions.
things for this afternoon is to work on getting that template. And it's going to be a contract template. Now, it is not a legally binding document. I am not a lawyer, but this is an example of what that contract between you and your kiddos should look like and how to set that up, and then just walking through that. So we'll put that in Progress University. I'll make a loom over it. It's going to be really simple so that anybody can implement this for themselves. But yeah, that's come up a lot. And that's the thing is like we want to, I mean, we didn't have kids to have tax deductions. I hope not. But I mean, we have them, might as well utilize them in all the ways. So
Exactly.
all right, ladies, awesome. So hopefully we'll hear from some folks for questions, but otherwise, I think that that's good for the day. And if y'all have anything else to add, then speak now, forever hold your peace. Thanks for bueno. All right, ladies, awesome. Well, you all have a great day, and we'll talk to y'all later.
Bye.